What's up, YouTube fam? Welcome back to the channel. We got a good episode for you guys today because we have some major things happening in the market later today, and I wanted to get this message out to hopefully help someone and just discuss it in general. So with that being said, let's get into where we're at with the account. Obviously, we're up $400 today, which, in the end of the day, it's not a small amount, but it's nothing to sneeze at. Overall, obviously, the account is down considering the fact that we actually started technically yesterday. Obviously, we started this account on November 7th, and if you've been with me from the beginning, just want to shout you out, say that, it means the world to me. Obviously, at this point, we only had 20K in the account. We got it from 20 to 25 very quick, then back down to 17, then back up above 23, and now here we are currently where we sit, which is 95,875. So all of that I was explaining, like I said, we were trading with 20K. Starting this week, we put 100. And of course, it has not been a good start to the week. Now, with that being said, it doesn't faze me at all because this was money I had in other investment accounts. So no matter what, I would have been down. Matter of fact, my other investments are down a lot more. So I'm actually down less. And that's something that option selling provides. It provides you an opportunity to, in the end of the day, I am selling what you call naked puts, but you still get to hedge. So what do I mean by that? Well, when it comes to selling puts, you have the ability to roll. Now, rolling is not something that's super easy, and it's not something that you could just do at any moment. But if you know what you're doing, then you can really save positions and save your account by doing it. So let me give you guys a quick example on how rolling would work. So in this case, right, this is my furthest in the money put, which means that this is the one that is getting beat up the worst. Now what's crazy is we're only down 277 and we've made back 250 today. So how do you roll effectively? Well, you want to roll when it goes in your favor because we're trading assets that should almost always pull back, right? IBIT being that it tracks Bitcoin exactly, and TQQQ being that it tracks the QQQs. Of course, it has a little bit of leverage, which makes it a little more dangerous. But overall, I still like the QQQQs better than trading most individual stocks, even Bitcoin. I mean, at the end of the day, when we pull up the chart, obviously, look, TQQQ is retracing, right? Bitcoin, I mean, when we look at this chart, obviously, I could see it filling this gap, but I could also see it filling this gap, and any of the others. So, Bitcoin, it looks like it could have a long ways down still from here, right? Let me pull up the real Bitcoin chart for you guys. I really don't know. Just by looking at this, my indicators, the weekly still looks bearish. The daily, I'm sure looks better, right? I'm sure it looks like, let's see. Yeah, I mean, listen, it still looks like it has more time before it creates like something like this, right? This is what you want to see. This indicator, this is the market cipher. It's one of my favorite. Obviously, it combines a lot of different indicators. But just to keep it really simple, you want to see a lower high, similar to a chart, right? Obviously, you see after this, we followed with some upwards movement. And then, of course, it's the same concept, a higher, did I say that wrong? A lower high? I meant to say a higher low, right? In this case, a lower high obviously was followed by bearishness. Now, I don't follow this indicator to a T, and I don't believe any indicator should. I just use it as an extra confluence. But the point I'm getting at is Bitcoin looks like it could easily have more room to dump. Or the other thought process is we swept these lows, right? Because these wicks, a lot of times these wicks are like, I don't know if you ever saw that meme where it's like you put a Cheeto trying to hold the door closed. I don't know, Google the picture, Cheeto holding door closed. Or let me Google it for you. Cheeto holding, there you go. Cheeto holding door. There you go. So, this is exactly what I'm talking about, right? When you see these types of wicks on the chart, it really is like a Cheeto holding a door, and almost always the market will come back and knock down those wicks. So with that being said, Bitcoin has obviously taken out lows. Now it obviously looks like it can come all the way back, and one chart I always watch is the Bitcoin CME futures chart, and the reason being is because it shows gaps where the regular Bitcoin chart doesn't. So we do still have this gap to fill. So in my opinion, I would say Bitcoin looks like it will most likely fill this gap. Otherwise, we swept these lows and we head back up. Anything could happen, right? It can go all the way down here for all we know. Now, that's the issue with this option selling account, right? Is majority of our capital is into IBIT. So, it's funny because people have commented on my videos, oh, option selling is going to make people broke. Option selling is turning billionaires into millionaires. You can't blame option selling, right? In the end of the day, I'm the one that has majority of this 100K in IBIT. And the reason being is because I sold Bitcoin holdings to sell puts on IBIT, and and that's why it's like for me, yes, I could have kept it cash, and obviously I would have been happy the next day or the last day or two, but in the end of the day, My concern is missing out on the Bitcoin bull run. So I'm like, I need my money there 24/7. If Bitcoin continues to crash, then my money would have been losing anyway in that account. In this case, I'm selling puts and I can roll lower. So, I did get a little bit ahead of myself and I did get off track. What I was trying to show you guys was how to roll a put lower. So obviously in this case, TQQQ is starting to come back up. Now I wouldn't roll today because it's only Wednesday, right? So we still have 2 more days for this to lose value. So realistically, if it does retrace more and more by Thursday and Friday, I can be basically either back even or back up, which would allow me to roll way more effectively. But with that being said, at this moment, right? So if we look at the option we currently sold, the one we're looking at was the 86.50, right? So it's $6.50. At this moment, if we wanted to roll lower, we can go, not really much lower, right? To still collect a credit. Obviously, in this case, it'd be a $10 debit, which I wouldn't mind. But the point is, I like to always roll lower and still collect a credit. So in this case, we'd only be able to go 50 cents, which would save us $50 plus 25. So it would make us in total $75. And we would be lowering our entry. Now, again, with that being said, I don't roll ever really on a Wednesday. If anything, it's a Thursday, but usually I like to wait until Friday because of something we like to call theta, right? So in this case, this option is going to lose 16 cents every day, or in other words, $16. Now, that might not seem like a lot, but when you combine that with the possibility of this retracement continuing, right? Next thing you know, by Friday, we're at 83.84, and this option is actually up money, and at that point, I'll be able to roll down $3, $4, $5, which, if you're not familiar, it is 100 shares. So if you're rolling $3 or $4, that's 300 or 400 you're saving. Because at the end of the day, that's what we want, right? We want to get the lowest entry on TQQQ possible while still collecting credit. Like obviously an 86.50 entry isn't terrible, but it's not ideal, and it's not really what I want. Like obviously I have a 79.50 put, right? So this position is already up money. Now, this will probably expire worthless, but if it doesn't, then this is something I could consider getting assigned on because it's a pretty good entry, right? These other ones, this 86, this 85.50, I would want to roll lower and try to get my entry under 80. And if I don't, ideally it all expires worthless and I make all of this money back. Like obviously not all of this is profit. This is, I bought this option, so don't include this, but everything from up here, assuming these options all expired worthless, would all go into my account. Again, not all of it's profit, but you can do the math. 595 plus 640 plus 550 plus 170 plus 170 plus 1,000 plus 1,200. It's a lot, right? So assuming all of it expired worthless, then we'd be well over 100,000, well back into profit. But assuming it doesn't, then we would want to either keep rolling or get assigned and sell covered calls to make our money back. So with that being said, I know I said to you guys I was going to cover Nvidia earnings, right? We have some big earnings. The 2 big companies I'll be watching are Nvidia and Snow. Of course, I'll be watching IonQ and Mara as well, but I don't intend to trade anything. Now, if you have a large account and you have profits that you want to play with, then sure, go ahead. So the strategy I would consider running for earnings, there would really be 2 strategies at this point, right? I would either consider selling cash secured puts because look at this, guys, right? The premiums are going to be, they're just extremely inflated, right? For 2 days to be able to collect this much on Nvidia. Now, I'd probably go low, right? If we look at the chart, and this is the beautiful part about option selling, right? You don't need to be a chart analyst or a chart expert, but it does help because at the end of the day, it's good to know what you're looking at. Now, obviously, with that being said, there's still no way to tell if you're going to get a good position or if it's going to actually work out. But I like to be smart enough to at least go below a low. So in this case, I would probably stick to the 124. So, you'd collect $257. Now, worst possible case, it dumps below 124. You're stuck holding the video shares at 124 and you get the $258. Now, that's really not a bad scenario because Nvidia, in the end of the day, is one of the biggest companies. It might even be the biggest, right, in terms of market cap. It's not something that's going to be crashing anytime soon. And what you guys got to understand with market cap is that when there's so much money involved in a company, it's going to take the market with it. So if Nvidia crashes, you better believe 90% of the stuff that you guys have in your portfolios is going to crash as well. Obviously, if Nvidia has a bad news, it's going to crash more than the market. But, again, you have to believe that most of that, is going to take the market down with it when it's such a large market cap. Now, if you don't have money to sell options on Nvidia, you could try NVDA, but it is extremely risky. At this point, if you've been following me for long enough, then you've known that I've made some money on these 2x plays, but I've also gotten destroyed. So I'm not going to necessarily endorse it, but of course you can sell options with 5,800 instead of 130,000. Now, there is one last strategy that you can consider when it comes to selling options during earnings, and that is a spread, right? So if you are bullish, you can do a call debit spread. If you're bearish, you can do a put debit spread. So I'll show you guys real quick what that would be. Okay, so here we are, 58.60. So basically, what you're trying to say is you want it to go above this price, right? So look, if you look at it, right, it's very simple. You don't need to necessarily try to figure it out. Ultimately, as long as it gets above 61.50 by Friday, you will make money, right? But obviously it does cap your gains, but of course it caps your losses as well, compared to, you know, when you sell options on, you know, if you just sold naked puts or sold naked calls, you know, technically your losses aren't capped. Obviously they are in a way, because, you know, we wouldn't expect Nvidia to go to zero. But with that being said, you know, when you're putting up 100 shares, right, when you're putting up 13,000 and Nvidia goes down 10%, you're down 1,300, as opposed to just doing something. And that's where people like to buy options, right? And that's where I understand the argument for buying options, is because, like, at the end of the day, if I put this 770 in, I can only lose the 770, right? If I own 100 shares and it loses 10%, I'm losing 1,300. That's double 770. Now, the reason why I like to sell options is because when it's an asset I know is going to come back, I'd rather put more capital up to basically ensure that my capital stays safe. It's almost like insurance, and that's why it's funny to me when people are so afraid to sell naked puts or sell naked calls, because it's like, you know, in the end of the day, I've bought options with large sums, right? Obviously, in this case, you're only risking 760, but you know, if you put 10 contracts in, you're risking 7,000. Now, obviously, this 7,000 could hypothetically be worth 30,000 tomorrow if Nvidia has an amazing earnings report, but the reality is there's a better chance you end up losing, and that's kind of how option buying works, especially for the average person, which is why everyone should be selling options, because, you know, first of all, you're collecting premium on stocks you love. And second of all, you get such a better understanding for how the options market moves. Like, I truly didn't know anything about options until I started selling options. And this is coming from a guy who bought options for years. You know, I bought zero date. I bought the cheapest options possible. And that's what I see a lot of people do, right? They just buy far out options, right? Far out of the money because it's the cheapest possible. You know, like, let's just look at IBIT, for example, right? The average person, if they wanted to buy options on IBIT, what they would do is they'd pick something like a month out and they would go, you know, all the way to here. Oh, it's only $80. I'm just going to buy it. Well, guess what? You're most likely going to be kissing that $80 goodbye. You know, if you're going to buy options, at least go deep in the money. You know, for me, what I'm considering doing is I'm considering taking my profits that I collect off the open positions and buying something so deep and so far, because at that point, you know, the break even is only $52. Obviously, if we go into a massive bear market, then yeah, I'll lose this 3,700. But you can also sell calls against it, right? So that's part of my strategy, is buying these deep 2-year out leaps and selling calls against it. You see me doing that with TQQQ here. Obviously, I'm down 500 on this current position, but I've already collected, I think, 200 or 300 in covered call premium. I'm down technically on this one as well. But if you've been following me, you would know that I've already made money collecting on these premiums, and I could always roll this. So obviously in this case, if it expired by February 28th, I would have to technically sell at 81, right, and close the leap and this position. But instead of doing that, what I can actually do is roll higher. The same way with puts, we can roll lower. With this, we can roll higher. So being that it's $1.68, I want to collect a credit. So I can go all the way up to $83.50, which, yeah, it's only $17 credit. But the point isn't to get rich off this credit. It's just to save your money. So instead, I'll be making 17 on top of this, and I wouldn't have to sell unless we got to 83.50. Now, again, I don't anticipate rolling until Friday, because I just always like to wait until Friday just to see what happens. But, you know, since I have all these puts open and this call open, maybe I'll roll earlier, maybe I'll roll tomorrow. We'll see. But like I said, for calls, it's the same thing as puts, but the opposite, right? So in this case, you know, obviously with puts, you want to roll when you see something like this. With calls, you want to roll when you see the retracement back down. So again, it's all the same. It's just the opposite. Let's see, where's the path? So yeah, something like this is where you want to roll for puts, and something like this is where you want to roll for calls. Very simple, but you know, takes a little while to understand. And of course, it takes tolerance, right? It takes risk tolerance. I didn't just wake up one day and, you know, was okay with stomaching all of these losses, you know, down $5,000 in a week. You know, it's not like you just wake up and do that. You just deal with it, right? You take loss after loss. And ultimately, like I said, I feel much more secure selling cash secured puts than what I was doing with this money anyway. So hope you guys learned a lot. I hope you enjoyed this video. Make sure to like, make sure to comment, make sure to subscribe, and I will see you all in the next one.